IGL is also in focus after the numbers. We have the management now joining us. Kamal Kishore Chatiwal, Managing Director at IGL, is here with us. Let's start by understanding that last quarter you had highlighted about volumes touching around 9 million cubic meters. What is for the quarter? But it has come at a shade below 8.6. What led to this slightly lower volumes front?
Actually, typically for CGD sector, if you look at all the all the players in the in the sector, the first quarter is the lowest of among the 4 quarters. And the reason is that the school buses are off the roads, people go on holidays, so both the transport and the domestic sector are impacted. And that has but if you look at the first quarter that we did last year, it was at around 8.2, and this year we are at 8.64. So there is an increase of 5 to 6% over the last year volumes.
Okay, and how's been the volume trend so far in the second quarter, and any expectation of a growth on a sequential basis in Q2 versus Q1?
You see, if I look at the positives from this result, one is in the transport sector. Outside of Delhi, we are growing at 16%. We are growing at 22% and 16% overall, both the CNG and PNG sector. So that is one positive, and we expect the outside Delhi GAs to do even better than this, in the sense that as and when the infrastructure gets commissioned, so we'll see more and more volumes coming outside GA. So the share of Delhi was earlier at 73%, now it has come down to 70%. So that has been a positive, that outside Delhi GAs are contributing more to our both the top line and the bottom line.
No, at least directionally you're helping us, sir, but any number on how volumes have been in Q2 so far?
You see, Q2 would be, I think we will be closer to 9 MMSCMD in that quarter. In the 8.64, we are hopeful that we will be able to achieve 9.
Okay. You have given a volume guidance of 9.5 MCMD for the full year now. Given that the start has been slightly on the lower side, would you be sticking to what kind of guidance do you, for the full year FY25? Can you share?
Yes, we are confident because some of the initiatives that we have taken with respect to industrial and commercial volumes, especially the pricing, with issues related to pricing, as well as the outreach. So that has expanded, as well as the infrastructure that we are developing. It's now reaching most of the industries. So we expect the industrial, commercial, as well as the CNG volumes to pick up in the second quarter, because more and more stations are getting commissioned. And the second, third quarters, typically you have the festival season also coming in. So we expect that the volumes will pick up, and 9.5 we should be able to do.
Okay, point taken. But also on the margin front, I wanted to get a sense from you, because higher unit margins was a bit of a surprise, especially given the increase in APM shortfall and higher gas prices in the quarter gone by. What led to the lower gas costs, and then are these margin levels even sustainable going forward?
You see, margin improvement has been due to two reasons. One is the lower gas cost, and the second reason is the operational efficiency that we have brought in. So operational efficiency, we expect it to continue. There is no doubt about that. As far as the gas cost is concerned, so we source some volumes. In addition to our long-term, we sourced as and when the opportunity came, that spot prices in between came down, and we sourced a significant quantity of gas through the exchanges. So that led to our gas cost going down. And in addition to that, the Henry Hub has been very favorable as compared to the crude linked contracts, in the sense that crude has remained at elevated levels, above 80, 85 levels, but Henry Hub has been slightly moderate to that extent. So 50 to 60% of our long-term contracts are Henry Hub related. So that has been a positive thing for us.
Talking of APM, let's talk about what kind of APM volumes are doing right now, and are the gas costs favorable right now for the company?
See, APM is at 62%, 38% is RLNG. That's our mix. And we expect APM to remain at these levels. Don't see significant cut this year. And the pricing, we expect the prices to be in the range of $10 to $12. RLNG prices 10 to 12, and our long term would be in this range only.
Okay, the other thing which everyone was expecting was around the excise duty, but I just wanted to get more sense from you. Excise on CNG was expected to be cut to 5 to 7% from the 14.4% currently. However, the government has not made any such change. Has the company or the regulator made any representation to the government relating to lowering the tax on CNG or bringing it under the GST ambit? What's your own prognosis and analysis as to whether we should expect that realistically or not?
No, we are hopeful that many of the things may not appear in the budget, in the sense that if the complete homework is not done. So maybe, and it is not that if it doesn't come in the budget, it will not be implemented. So we are hopeful that this issue will get addressed. I mean, a regulator as well as the ministry as well as the entities are making representation regarding this. So we are hopeful that outside of budget, this would be done.
What have been the CAR conversion rates in car conversion rates, obviously, in the first quarter? Because that rate was very healthy till some quarters back. Are we back at the earlier mark, which we saw almost 16 to 70,000 vehicles a month?
We are close to now 19,000 in the first quarter. So there has been a good conversion. In addition to that, the recent launch of two-wheeler. I mean, the two-wheeler market was one where the CNG penetration was not there, but with the launch of a two-wheeler vehicle by Bajaj, currently Bajaj, and TVS has also announced that. So we expect some volumes to come from two-wheeler also in the second quarter. Because Delhi, it is being launched in the end of July, and the deliveries would start in second week of August. So we see volumes coming from that, and we are preparing our stations to address to this increased situation, because two-wheelers, the numbers would be more, but the quantity would be less. So that is one factor. Plus, some of the OEMs are coming up with renewed models where the issue of boot space is getting addressed. And so the confidence that OEM have on the CNG vehicles, I mean, that shows that in addition to the conversion, the old vehicles, the new conversions should continue, and two-wheeler will also add to our volumes.
Okay, sir, on that note, we let you go. Thanks so much for making time and speaking with us. Appreciate you joining us on the show.
If you like this video, then like, share and subscribe to ET Now.